Good morning, sir. My name is Legade Safitri. I'm from Accounting D. This is my record about the article What is cash flow and why is it important? Cash flow is the money that is moving or flowing in and out of your business in a month. Although it does seem sometimes that cash flow only goes one way out of the business, it does flow both ways. Cash is coming in for customers or clients who are buying your product or service. If customers don't pay at the time of purchase, some of your cash flow is coming from collection of account receivable. Cash is going out of your business in the form of payment for expense, like rent or a mortgage, in monthly loan payments, and in payments for tax and other account payable. Think of cash flow is a picture of your business checking account. If more money is coming in than is going out, you are in a positive cash flow situation and you have enough to pay your bills. If more cash is going out than coming in, you are in danger of being overdrawn and you will need to find money to cover your overdraft. This is why new business typically now need working capital in the form of a loan or a line of credit to cover shortage in cash flow. Cash versus real cash. For some business, like restaurant and some retailers, cash in really cash, currently and paper money. The business takes cash from customers and sometimes pay its bill in cash. Cash business have a special issue with keeping track of cash flow, especially since they may not track income unless there are invoices or other paperwork. Cash business are more at risk of being audited by the IRS. Why cash flow is so important? Lack of cash in one of the biggest reasons small business fail. The Small Business Administration say that inadequate cash reserve are a top reason startup don't success. It's called running out of money, and it will shut you down faster than anything else. Starting a business, dealing with cash flow issues is most difficult when you are starting a business. You have many expense and money is going out fast and you might have a sales or customer who are paying you. You will need some other temporary sources of cash like through a temporary line of credit to get you going and on to a positive cash flow situation. Seasonal business. Cash flow is particularly important for seasonal business. Those that have a large fluctuation of business at different times of the year, like holiday business and summer business. Managing cash flow is in type in this type of business is tricky by but it can be done with diligence. Versus profit. It is possible for your business to make a profit but have no cash. How can that happen? The short answer is the profit is an accounting concept, while cash, as not above, is only the amount in the business checking account. You can have assets like account receivable, money owed to you by customer. But if you can't call it on what's owed, you won't have cash. Your accounting system may also show a difference between cash and profit. If your business run on equal accounting, you recognize income when the invoice is sent, even though the customer hasn't paid. In this case, you might show a profit but not have the cash. How to analyze cash flow? The best way you keep track of cash flow in your business is to run a cash flow report. A cash flow statement looks at the change to cash, in this case, your business checking account, from different business activities and increases or decreases in other accounts in the business balance sheet. For example, what happened to cash if a customer pay a bill? What happens to cash if your business purchases supplies? What happens to cash if you buy a computer? What happens to cash if you pay an employee or an independent trader? At time, you might need to keep track of a cash flow on a weekly, maybe even a daily basis. A quickly and easy way to perform a cash flow analysis is to compare and total unpaid purchase to the total sales due at the end of each month. In the total unpaid purchase, the greater than the total sales due, you will need to spend more cash, more you will receive in the next month, indicating a potential cash flow problem. To dig deeper into this tip, at the end of this month, look at your total sales and up the purchase you have made did still need to be paid for. The difference is what you will need to bring in as income to stay even. This is monthly cash shortage continues for several months. You get further and further behind. Okay, sir, thank you.